Another part which we missed out is your agritech experience. You've been working in agritech for quite a long time. I mean, was it by design or was it by random? Because your work is like huge list of companies, and agritech was never in the first, right? So how did you end up in agritech?
Yeah, I think it was by chance. So what happened was some friends of mine started Intello Labs, and they were focusing on AI and computer vision. And I was in a slightly different industry. I started with consulting, moved to analytics, and I saw that AI and computer vision, these are going to be like the future. And I started discussing, hey, I invested in you. Is there a way for me to kind of work with you guys? And they said, yeah, come down. We'll figure out something to do together. And so that decision was taken first, that I'll join them and I'll do something in the world of AI. And Intello Labs itself was experimenting with various use cases. And it was by accident that agri kind of caught all of our attention. Some experiments there, and suddenly we realized, hey man, it's a huge scope out here, so underpenetrated. Let's do something over here. And mind you, agritech was not a sexy word when we started looking into agri applications. So it was purely by accident. Once we started working on it, Intello also enjoyed working in the space, and I also enjoyed working in the space, and life goes on.
So coming to the goof-up bit, the humor bit, right? Why humor? Why did you start with this series which you posted on LinkedIn and further, and you agreed on something like Goof-ups in startup, right? So why humor? Why is that? How did you start the series in the first place?
So, if you sit with founders or if you sit with investors, either of the two, there will be some serious conversation about, this investment, this space, this action happening. But more often than not, you are sharing funny stories. Pata hai wahan kya hua? Dude, you won't believe what happened there, and so on and so forth. So it's actually those funny instances and interesting anecdotes and those real stories which remain, more in your mind, and that's what you relish kind of sharing and resharing and rediscussing, so to say. So that was obviously the main thing. And then I also realized that a lot of people write about or talk about startups, but almost no one, in fact, absolutely no one else was taking the humor element around those stories. So I said, why don't I give it a shot and talk about the experiences but add a humor element to it. And that's the way I kind of started out. And then I said that, okay, if I'm going to do a humor series, let me have a few characters out there. And that's how Fudu or founder Udham saying,
NSW, man, not safe for work. But yeah, kidding.
Sure. Yeah, so that's how it started.
Right, and a lot of goof-ups. I mean, between the conversations, you shared a lot of disasters happening in, right? So any good investments you want to share with your audience over here? And sorry, briefly, I know there is a lot of disturbance in my side. I'm really sorry about it. I'm trying my best. So I'll mute myself. So let me know if it's not working, right? Yeah, sorry. Good investments.
Yeah, sure. So I think one company which a lot of people in the audience would be able to relate to is Blu-smart. So this is a mobility company, the Ola Uber equivalent, but running only EV fleets. They're doing extremely well. And that is an investment I'm really happy about. And I'm looking forward to kind of, more excitement out there. But absolutely, Blu-smart is one thing I'm extremely proud about.
So Ram, I was just wondering, as an investor, what made you invest in Blu-smart? What was the most exciting thing you liked about the company, founders, industry?
So there were 2-3 things about Blu-smart. One, I think we were able to see the movement of the overall energy and mobility industry towards adoption of EVs. And given the fact that they were a pure, EV fleet, I think that was one thing I really liked about as a theme, so to say. Secondly, as a model, they were very they caught on to the pain points of the typical Ola user and the Uber user, which was cancellations. And their fundamental premise that there will be zero cancellations because we own the fleet, we ensure that you get the delivery. That was good. And thirdly, there was a decent amount of traction by the time I got involved. I didn't get involved at an idea stage. There was already some level of presence in the market, and the founder was not like fresh out of college. They had built certain things, and then they also kind of they were doing a decent round. So overall, it just though everything kind of fit in together.
So we have a question too. Sorry, Pushkar, you want to ask something, or can I pick a question from the audience?
No, please go ahead.
So somebody has asked, Ram, please share insights about Hesa. What is Hesa?
Okay, so Hesa is a very interesting startup, and I'm very happy to be associated with them. So they're a rural distribution company. What that means is whether you are a agritech marketplace company like a Gramophone, which is trying to buy from the market, rather buy from the villagers, or you are a tractor company like a Mahindra, who are trying to sell to the farmers or the rural consumers, so to say. Hesa provides you the distribution network to do both. Whether you want to buy from the rural areas or you want to sell to the rural areas, they are your distribution partners, so to say. Beautiful business model, doing extremely well. And then now they've kind of expanded. When I started working with them, or when I started engaging with them as an investor, they were primarily into agri. Then they added FMCG, and now they have a fintech layer. They're doing loans and whatnot. So beautiful business, and I'm bullish about that as well.
So
Thanks,
I
Ram.
was just wondering, Ram, are there some other companies like Hesa who are building similar rural network in India? And what do you think is so special about Hesa? Is this their
Sure.
team?
Yes. So one is definitely the team. So the Hesa founder Vamsi was building something very similar for Wipro Consumer Care. So it kind of done this rural distribution. He knew the business inside out. He was a founder you could bet on, so to say. And he has had his struggles, and so there was a certain level of confidence. There are one or two other companies who are trying to attempt similar stuff. But yeah, Hesa is what I saw first, and I like the team, and I am bullish about their prospects.
Folks, I mean, we are almost 15 minutes in the meeting and we haven't spoken about Goof-ups. We have been talking about all the good investments which Ram is doing. I guess it's time that we justify the topic, and I guess that's what attracted people over here, right? So, Ram, starting with the worst or the most explosive Goof-up which you have done or which you have faced as an investor. You want to share something?
Sure. So, so there's this one fintech startup I put money into. And, so they were like a fintech for fintech. So they were building add-ons which all the other fintechs could leverage. It sounded very exciting. It came through a network where I had a lot of confidence on the person running the network. And he himself had been invested in fintech startups for many, many years. In fact, his first investment was a fintech startup. So sounded great, the founder was impressive and they had decent numbers, blah, 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 put in the money. And guess what? A few months down the line, they got into trouble when the government started, putting pressure on anything which was remotely related to China, clamp down. So I don't even know exactly what happened behind the scenes and what was the China angle and, who got involved where. But the bottom line is, all the assets of the company got blocked. In fact, it was quite scary to know that the founder actually got jailed. We didn't get to know exactly what happened with the guy, and I think he was missing in action for almost a month or so, and then eventually came back and we were like, "Oof, thank God, at least you're fine." Worst case, shut down the company and start something new. But yeah, it was a bit of a scary, and it was like out of the blue. You when you look at an investment opportunity, you look at okay, does the regulation allow what you're doing, and do you have confidence in the team, and do you think the market is large enough, blah blah blah. But no one can guess that government will come down and bloody jail the founder. That was like a major unexpected.
I think you will not be interested in crypto anymore, right?
Yeah, crypto is another crazy thing out there. I don't know what's going to happen to that market. I am fortunately or unfortunately invested in crypto, but I'm always worried about whether government will come and jail me one day or not.
छोड़ेगा नहीं, chance लेने का full on. Pushkar, you want to ask something or?
Well, I was just saying it's crazy usually because you don't hear stories of founders going to prison. So it must have been a very difficult experience for you also as an investor.
Yeah,
Because-
I mean, I'm right now laughing about it, but when we first heard about it, we were like, oh, holy shit, what the hell happened? I mean, we never thought this could be, one element of investing in startups that suddenly, someone is going. And it was not like, there was no fraud, or it's not like, koi paisa leke bhag gaya. It was, oh my God, suddenly the government is just clamping down everything related to China, and there is some remote link, something, some partner they had, and because of that, it got clamped down. So it was scary. It was quite scary at that time.
So we have people asking for more goof-ups. Actually, I guess we are lacking short, But I was just wondering, is it the only issue in fintech, or are you invested in more fintech companies, and have you faced any similar fate in any other fintech?
Yeah, there are quite a few like bad investments. So I'll tell you another kind of crazy story. So this was one of the fintech players who do basically SME lending, and it was all a digital onboarding journey. And to be honest with you, in retrospect, it was more a case of FOMO for me, because I thought that too many of these SME lending guys, pure digital guys are coming up, and I'm not invested. Suddenly I saw a pitch and I'm like, okay, this sounds interesting. Helps me kind of ride the bandwagon, and I put money into them. And guess what? So they had some NBFC with whom they were working. So basically that NBFC was giving them money for them to lend forward. And they had some hassle between the NBFC and this fintech. So the NBFC put a legal case against the fintech, and suddenly they had zero money. So the angel network through which I had invested, this guy came and said that never in my life have I seen a startup getting shut down in less than 6 months of funding. And for such a crazy reason. It's not like, they were burning money and they ran out of money. Suddenly there was like a, fallout between them and their NBFC partner, and, it's gone into a loop, and, it's all kind of in the air, so to say. I did hear a couple of weeks back that there is some salvage which might happen, but as far as I'm concerned, I've mentally kind of written it off. So again, it was one of those things. I thought potentially they may not survive, they may not do as well in the market, they may shut down because they didn't do well in the market. Those scenarios had played out in my mind, but I didn't think that they're a fintech player and their NBFC is going to fight with them, and they will have they'll not have the ability to kind of service the market. That was another crazy fintech story. There are many goof-ups in my life.
Very experienced, isn't it? But it's sort of scary as well in another aspect of it, on the not on the lighter side, but the other way. If you look at it, it's just very scary that the risk associated with investing is much more than what people presume. From an entrepreneur side, on the startup side, founders always think, "Yeah, paise to dal raha, kya kar raha hai?" But the kind of legal and other issues which comes along with that investment is something which is scary. You might get a knock on the door anytime if something is wrong, right?
Absolutely.
The liabilities which comes into it. But I hope you have your legal agreements in place now after all these things, indemnifying you from any kind of legal recourse now.
Yeah, as an investor, there is for lack of a better word, some kind of an arm's length, and we are not directly involved with the day-to-day running and so on and so forth. Anyway, as a small-time angel investor, you're never on the board, or you don't have any management control, so to say. So that way, you are relatively safe. But yeah, when suddenly you hear about a police case and all, you do start getting worried. Oh my God, can they also knock your door and see what's happening, so to say.
We have some interesting questions coming up as well, but I guess whenever it's relevant, we'll pull that questions in, or probably in the end 15 minutes, we can address those questions, we can share some insights onto it. So Arjun, just hold on for a bit. Meanwhile, you won't be able to see Ram because it's my panel is just appearing, so right. So anyways, we have set the worst bar, right? This is the lowest, the most frightening bit which has happened. So, if you go into the other end of the spectrum, a near miss, something happened and a near miss, you salvage the situation that would have ended up in a Goof-up, but then, you managed to salvage it altogether. Anything like that which you want to share?
Sure. So Hesa itself was an interesting experience as an investor. So as I said that I had so this I came across Hesa when they were doing their early angel round, and their pitch was on 2-3 different angel groups. So I saw it in one group and I kind of missed it, and then I saw it in another group. But by the time I could go back and commit that, hey, I want to invest in this, the round was more or less over. So I did manage to connect with the founder, and we had a brief chat, and and the founder was not too keen at that stage. Like, "Arey yaar, mera round ho gaya hai. I'm trying to bloody finish the SHA. I have enough legal hassle already going on. Now you suddenly want to come and add, one more line item in my document. I'm not that keen." Then, literally over one weekend, I had to sell myself to him that, look, I'm not just an angel investor. I'm in the agritech space. I can bring true value to you. And, please help me prove myself, so to say, literally in those many words. And over one weekend, I got him like 15 introductions that, hey, here is a startup you should talk to. Here is someone you should talk to. Here is someone you should talk to. And then, the founder was like, okay, this guy really, knows his network and knows his shit. And then, of course, I kind of got onboarded as an investor. They've already done one up round since then, and they're in the market trying to raise another round at a higher valuation. Vamsi has been a good friend since we started engaging. So that was one good thing which happened as an investor, so to say.
The Goof would have been that if you had missed that opportunity, isn't it?
Yeah,
Almost.
that would have been, like a lost opportunity. I had so many like, oh my God, why did I invest story? And, that would have been, oh shit, I wanted to invest and I couldn't invest kind of a story.
I'm sure every investor has this kind of stories, right? A diamond dozen of them, if you're not wrong. But so how is that? So a question which comes to my mind is that how do founders make sure that if they have a very interesting proposition, right? Where do you find these people in the first place? Is it through angel investor or something like that, or through the syndicates, or how do founders make sure that you find them on the right time, in the nick of time? Any thoughts? Any random thoughts?
See, I get leads or investment opportunities through 2 channels. So one is I am part of a few angel investment groups. So we keep getting deals over there, and whatever looks interesting, then I try and dig deeper into it. And then because I've been in the agritech space and I'm kind of active on LinkedIn as well, I do get a lot of direct inbound queries as well. So in fact, after you posted about this particular session, quite a few guys have already pinged me on LinkedIn. Hey, you're an angel investor. I need money. Please look into my pitch, so to say. So those things also do happen. I mean, especially in the agritech space, I am able to evaluate better. And if it is in some other space, I typically go to my friends, and it's more of a discussion, and then we find out where to move forward. But this question of right timing is also tricky, because the whole market moves in like extremes of optimism or extremes of pessimism. So, around this time last year, I was speaking to so many micro VCs, and, they were all, is a multiple of 20 times revenue reasonable, or 15 times is reasonable? Those were the conversations which were happening at that time. And, it was more of founders had plenty of choice. I can go to that investor and this investor. Now it's the other way around. yeah, the business is good, and I like the founder, but I don't know whether this is the right time to invest. I and instead of 15 or 20 times, even 2 times revenue is too big a multiple because of the time we are in. So it's like, I don't know how to uh, gauge the market, or what advice to tell people, this is a good time to invest or a bad time to invest. But it's crazy. It's just, either too much optimism or too much pessimism.
But if so, basically, what I understood is that LinkedIn is a place to connect with you and reach out to you, isn't it? One day,
Absolutely.
right? But you're doing a very bad goof up over there. Probably you should post angel investor atop all your others. So I guess it's somewhere hidden in the middle. So people don't know whether you're an angel investor. That might be the reason you start getting pitches, recently. But the kind of portfolio which you are talking about, I'm pretty sure these are the best goof ups and the worst goof ups. So you must have a lot of other investments running around, right? I mean, how is it net? Is it profitable or at loss right now? Where are you placed? जूते पड़ रहे घर से.
So another thing which a lot of investors find it difficult to believe is I have practically zero exits so far. So the exits are basically the ones which got shut down, but otherwise I've not really sold and said that okay, I've booked my profits here. But at a portfolio level, it's at a decent IRR. But it's all on paper. Only when I get an exit can I clearly say, हाँ ठीक है, इतना पैसा डाला और इतना आया types. And a lot of people don't understand this. They see Shark Tank and they believe that angel investment is like the next best asset class. Index funds are passe and small cap funds are passe. Let's put money into angel investments and see it all multiply. Nobody talks about the number of failures you had, number of companies which shut down, and all that stuff. People just ignore it.
So next सवाल ये है कि जूते पड़ रहे नहीं पड़ रहे. That you haven't answered yet. But anyways, I got an interesting question from Saurabh. This is, I guess, can you see it on the screen? How has your investment style changed from 3 years back to now? Pre-COVID, post-COVID, I guess.
Sorry.
I guess he's asking about pre-COVID and post-COVID scenario, if I'm not wrong, or maybe.
Yeah, I mean, one is that, the other is the excess optimism then versus the excess pessimism now. And to an extent focus on profitability now. So earlier it was all about let's raise money, let's burn money, let's raise more money. Nobody was asking about EBITDA. Nobody was asking about okay, when will you turn profitable. It was all about just grow the GMV or the top line or what have you. Now there are serious questions on boss. What is your unit economics? When will you turn operationally profitable? If not, fully profitable and all that stuff. So that has most certainly changed. And I think again 3 years back, agritech was hardly known. When I was in Intello Labs and I was meeting investors, there were hardly a handful who knew the space, and essentially these guys were bringing in other larger VCs in. Now the scenario has changed. Now almost every large VC has some exposure to agritech, and there is a fair amount of interest. And again, within agritech also there is more focus on profitability. I think that's what has changed. And to an extent, the number of angel groups and platforms, they have also multiplied like crazy, man. I mean, every second, third week, actually more than direct pitches from startups, I actually get a lot of pitches from angel group. I understand that you're already investing through Angel Bay. Why don't you also evaluate, my angel group, so to say? And everyone I ask the same question. Okay, how are you different? And they don't have an answer. They all say, "Oh, we have a very exclusive group, and you can also be part of this exclusive group." There is a plethora of that.
Have you also got an email from a 6-foot tall guy called Vivek Jorer? He's a part of Tremendous Capital. Milan with Pushkar. If not,
I was just wondering on this. So, what are your views on investing as an investor versus investing through a syndicate or a group? What are pros and cons?
It's so you don't want to be the lone fool who believed in an idea. So you would always want to have some form of group validation or some kind of a peer confirmation that yes, this makes sense and you should go for it. So uh, the uh, uh, the syndicates most certainly help that way. And also, all said and done, I'm not a very large investor, so it's not like I have a large number of quality deals coming my way. So again, the syndicate gives you the opportunity to tap into good deals. Like Blu-smart would never have come to me as an individual investor. It was because I was part of a group which brought that deal to me, so to say. So that's what it is. Of course, if you are focused on a particular theme, or you're a domain specialist and you have good number of inbound deals in that particular domain, then the chance of you getting early on into a deal are much better. So that way is then going in solo or taking some kind of a stake into the company, that okay, I will generate I'll help you raise a larger deal, that kind of a thing.
Interesting. We've got this question from Varun. I guess I should have asked this, but this is a good question. Any particular startup you regret skipping? You don't need a name probably. I mean, if your name as well, that's great.
Right. So there is a startup which started as an influencer marketing agency kind of a model, and then later they became more of you know like a creator economy platform where multiple people can do their own stuff, and they evolved and they became much larger. In their original avatar, I thought, I don't know what this business is about, and I didn't invest, but now they have grown multiple times, and they are growing globally, and I see their follow-on deals coming on the same network where I'm part of. Like, shit, man, I should have gone in early. I missed out on this. So that was one deal I do regret skipping.
Your spidey sense didn't work, isn't it? There.
Yeah, it didn't work.
Anyways, that's interesting. So I guess that is one. Any more you want to share, or shall we go to some other topic?
We can move on.
Sorry.
We can move on.
So in all these failed investments or these goofers which you're seeing, right? I'm sure there are more actually. If you want to touch base, if time permits, we're already at 11:33 minutes in, and we have like 5 questions more to be addressed. Please hold on. We'll have a couple of more laughs and then we'll come to the questions. So on this, is there a pattern where you see that how you can, what do you call it? As an investor, is there an evaluation metrics to figure out this kind of goofers can be avoided? Any tips or tricks on to avoiding these goofers? Have you seen anything?
DJ, sorry,
pattern?
you're not very clear. I couldn't hear you clearly, but is the question around how do I decide whether to invest? What are my criteria? Is that the question?
So I'm asking that whether the pattern, am I audible right now?
Yeah.
So is there a pattern you have seen which you can share with other wannabe investors that, these are the pitfalls you can see in early due diligence stage where you sort of, figure out whether you should invest? Like, for example, regulation is a murky area, right? So I guess now you will definitely ask whether this is coming into the gray area of regulation or not, right? So something similar like that. Is there a checklist which you have in place right now?
See, regulation is tricky in the sense that, if it's a known problem. So for instance, there was a startup which came recently. They wanted to build a business around betting. Now, whether it is pure betting or it is a game, and upfront that there is a gray line in which they are traversing, and you take a judgment call. Okay, this is of course the founder had their own views, but no, we are classifying under gaming, and this is what is allowed, and blah blah blah. But that there is a risk. So if it's a known risk, it's easier to address, and you take a judgment call. Okay, I don't care. This is a money I can write off, and hence I will invest. Or no, boss. Where there are so many reasons because of which a startup can fail. Why do I want to add regulatory risk also to that risk? I would rather not invest. It's a call you can take. The challenge is when you don't know what's going to happen. I mean, so that fintech startup, for instance, I had no freaking idea that, suddenly something related to China will come and I need to understand, what China related stuff these guys have. So I think regulatory wise, it's not that easy to understand upfront. Either it is fairly clear or you don't know what you're getting into. Rather, what I am increasingly wary of, let me put it that way, is tech startups at a very, very early stage. When I came into the startup world, I joined a tech company, and I kind of I was very excited about someone building something, you know, something revolutionary, something like truly new, and wow, if this works, it could change the world kind of a thing. But off late, I've kind of deprioritize those kind of companies, because the death rate of those kind of pure tech companies is extremely high. Either you need to be like a VC, who know that okay, I do 100 bets, and 2 or 3 of them will really break out and kind of wipe out all the, more than make up for all the losses that I have to wipe out. Or you play a little more conservative, and you choose, okay, here is something which is already had got some traction. It makes sense. It may not change the world, but it will also have a lower chances of dying down. That's the way I look at startups now. And I mean, you know, other tech startups I invested in, where I thought that, oh my god, this is going to be the future. And so there was a conversational AI company I invested in. It came through Let's Venture, that deal, and these guys were doing, I don't know, crazy amount of money being raised, and I think, if I'm not mistaken, they had Ratan Tata as one of their angel investors. I was like, oh my god, this is a crazy deal which has come on this group, and I cannot afford to miss it. And anyway, they were AI and all that shit. I was like, okay, this is the future. This is where the business is going. And again, when I pinged the founder, he was, okay, what's your ticket size, and why are you talking to me directly? Why are you not coming through the the network manager, and blah blah blah. And I was like, okay, wow, man, I'm getting this deal. And a year down the line, they shut down. And I have no freaking idea what happened. And of course, there were some mails and updates which said that, look, this is the problem. They couldn't even sell their IP. They were trying to find a buyer because they had done good work on NLP and conversational AI. And a lot of us investors thought that, okay, even if they are not able to scale their business, someone will be willing to pay for their IP. Kuch nahi hua, band ho gaya. So I'm a little wary of very, very high tech startups now. It feels a little strange for me to talk about it as an agritech ecosystem guy, to say that I'm a little wary of tech, but I am a little wary of tech now.
But ये तो we sort of covered regulation and product, right? Founders ने कभी problem create किया आपको?
Luckily, not in my case, man. I do keep hearing stories where the founders cheated. Luckily, I have not had that problem. Though, again, in terms of goof-up stories, I've had a case where the founders had a fallout. So one guy pulled out, and it had to be semi-liquidated. We got back some of the money. At least it didn't go down to zero. But just again, one of the risks you need to acknowledge when you get into the startup. Sometimes the founders know each other very well. They've known each other for multiple years, and there the risk comes down. But sometimes it happens. You need to kind of live with it. But luckily, I've not had a founder cheating and running away.
That's nice. You're lucky, isn't it? Extremely lucky, if I'm not wrong. I'm hearing a dime and dozen stories around that, right? So one pitfall you have avoided. I got two questions, one from Abhinav and one from Nitya. More on the similar lines, I guess. I'll just show the question from Nitya first. In the current market scenario, what do angel investors look for a criteria before considering an investment? And Abhinav's question is almost in similar lines. What are the factors you consider in particular while selecting company friend? I guess this is a more or less address, right?
Yeah. So, I can't talk about what other angels look at. Different people have different criteria. I look at the founder. If it's a founder who has done a startup earlier, or has worked in a kind of high growth startup environment, and that always adds weight to the startup idea, so to say. I look at the market, whether it's a fairly large market or they are solving some very niche and unknown and obscure problem. And I look at traction. So as I said earlier, I was very happy to go in and jump in at an idea stage, but now I look at some level of traction to get that market validation कि हाँ market में खरीदार हैं जो problem ये बेच रहे हैं उसको solve करने के लिए types. So these are the things I primarily look at.
Got it. So I'm not sure if this is your friend because he's asked a question which is very interesting. Goof-ups in your professional life apart from investing. You want to go on and on and on?
Yeah, man, that's a very, very tough question, and the answer is too long, so to say. So many mistakes have happened. I would rather not talk about it in this forum, so to say. I can tell you one broad kind of experience, so to say. So, during my Interlo Labs days, in the early days, the tech was not fully ready, and we were trying to sell a concept to our customers rather than a fully ready, evolved product. And sometimes the demos would go like a complete disaster. And then we realized that you need to manage multiple things. You need to manage the tech team's expectations that, boss, this is a critical demo. If you're not ready, then let's postpone whatever it is. And we also need to manage the customer expectations that, hey, I'll organize a demo, but don't be under the wrong impression that it's all perfect. This is work in progress, or here are the conditions where it will work and here are the conditions where it will not work. So those are, and what I realized again through my startup days and talking to other startups and even investors, in fact, that demos do go awry on and off, and that's part of the startup life, so to say. In fact, I mentioned it in one of my blogs. So there was an investor who had brought in their LP to our office, and we were gearing up for the demo. And this investor went, "Hey Bhagwan, demo theek se chale." And I was like, "Holy shit, man! I thought only the startup guys do, talk like that." But she was like, "Yeah, I know how demos go." And it's startup for the VC life, so to say. So yeah, it's part
And
of
it's
the
also up to the salesperson as well. I mean, quite often I've seen that the salespeople, they tend to portray a different picture to the customer when before the demo happens, or as founder portrays a different picture to the potential investor. And it's just like, basket खोलेगा तो सिर्फ एक आलू पड़ा और कुछ नहीं होगा टाइप वाला सीन हो जाता है. Anyways, hey, Pushkar is a co-conspirator in this thing. So, but I guess Pushkar, since a lot of investment wala thing happened, anything you relate to in terms of, this kind of goof-up which you have come across?
So we are relatively new to investing in startups, not as experienced as Ram. But I was thinking about one question. So Ram, how can startup founders avoid goof-ups, while pitching to investors? So because there are a lot of founders listening to this webinar, what would you tell them? How should they pitch to you so that you are excited, you think it's a good way to pitch? Any feedback on that?
Right. So I think founders need to be careful about two things in the pitches. One thing is about competition. A lot of founders are either overconfident that अरे वो तो खराब कर रहे हैं, we have a different model and we are unique and we will conquer the world and so on and so forth. And sometimes they even completely ignore to talk about competition in their pitch, which I think is a very strict no-no. It actually raises a lot of doubts in the investor's mind that, hey, do you even understand the market? You are being so bullish about the business, but if you're not talking about competition, then I am losing confidence in you as a founder because I may have some understanding of competition and so on and so forth. So I think competition is something which you need to be cognizant about. You need to address it upfront, and you need to be practical about how you will beat them or how you will like bypass them and do something on your own, and so on and so forth. And the other is, draw a little bit of a balance between what is practically the true state of affairs versus what is the dream you're building, so to say. All founders need to sell their dreams, obviously, and you have to sell your dreams on a daily basis to your employees, to your investors, to your spouse, that don't worry, you'll be fine, and you'll have that lovely foreign trip and a bungalow to live in, so to say. So you do need to sell the dreams, but sometimes you haven't like really got things sorted and you're selling too much, so to say. So that balance is a little bit important. And yeah, I think these are two things which I've seen many founders go like extreme.
Okay, so you said two things. One is ignoring competition, and second is overselling.
Yeah,
So these are two things founders should avoid.
right.
Now, just going back to one of your questions when you said, like earlier you used to invest at an idea stage, and then, of course, there were a lot of goof-ups, and you realized, hey, this is not what I want to do. I want to look at traction before investing. But then, how at least I look at industry in India is India lacks a lot of micro VCs. So, say if you're in a pre-revenue stage, how should founders raise capital? Say if there's a founder who is yet to make revenue, how can someone like her convince you and say, "Hey Ram, I know I'm at pre-revenue stage, but this is something maybe worth your time." Any advice on that?
Sure, sure. And this is a common question which a lot of startups ask me. So I wouldn't say that here's the way they can convince me, but what I would generally recommend them to do is do a friends and family round. One of the basic things slightly serious investors look at is, did your boss invest in you or not? And if not, then that is a bit of a flag that, hey, you couldn't even convince your boss, then how are you selling your dreams to others, so to say. And at the early stage, while a lot of people try and avoid family because they feel that it could just mess up equation, but a little bit of money from family actually doesn't hurt. Again, it's part of the overall jugaad mentality or the hustle mentality which investors look for, that at a very early stage when he doesn't have the capital to build out his business, was he able to convince at least the people he knew to bet on him? That also gives some form of validation on the founder. And that's what I tell a lot of guys, that look, you're at a very early stage. It's difficult for me or someone who doesn't know you to invest at this stage. But if you go to your professional network, you should be able to raise a small round and build something. I'm not saying that show me $1 million in run rate revenue. By then, there are a lot of VCs will come. But at a PPT stage, as an individual angel investor, it's difficult for me to come in when I don't know the person.
Right.
So I have a few questions here. I mean, and we are nearing the scheduled time, and I guess it's 1 hour is too long, to be honest. Right? People are in between their office and work and all. So we still have about 50 people listening to us, which is nice, and YouTube, right? So one question which I had, just to cover, if you had asked this question, is natural language processing interesting, especially after your NLP issue, right? NLP,
DJ, sorry, I can't hear you clearly.
Oh, is it? Can you hear me now?
Yeah, better.
So Hitesh had a question. So is natural language processing an interesting avenue for angel investors? Towards you, especially since your last experience, right?
Yes and no. So it depends on, if you understand the space and you can evaluate a new startup to the extent of, being able to gauge that, yes, this is something which is new, can build a large business and is sustainable or scalable as a separate thing, instead of competing with all the others kind of, already doing some stuff over here. But personally, I am wary of anything high tech and at an early stage. If there is traction, then I will definitely evaluate it. But otherwise, someone wearing too much of, hey, this is a revolutionary, life changing technology, I'm a little wary right now. Pushkar, what about you? Do you look at NLP?
I think I'm with you on this because my opinion is also most angel investors don't understand deep tech so well, something like NLP or AI. So if you're a founder looking to raise early stage investment, you are better off approaching seed stage VCs who do specifically such things, like some AI VC or NLP VC. Because like someone like you, like most of us have background in industries we have worked before, right? Something like finance, marketing, could be agritech. Now, NLP as an industry didn't exist 10 years ago when we were working. So most angel investors, very few of them would have worked in something as niche as NLP. So they would like, my sense is they would like to stay away
And
and
I
they would
guess
focus on something they understand.
And I guess NLP is a little challenging as well because as a country, if you look at India as a domestic market, right, we have so many languages here, and it's also, and then we have the English version of it, right, an anglicized version of all the languages. So it's like a murky world altogether. So I don't think I have come across any chatbot or any kind of NLP application which has uh, provided a good result yet. I mean, there are a couple of them, but still a little far away is my thought. And plus, we are skipping a step as well. Now people are using AI to create a completely human-like experience in chatbot, and it's a different game altogether. If I'm not wrong. And I guess I don't know. We heard this goof about Meta. Meta had this chatbot where you can talk to this, ask the questions in chatbot, and it will act like a human and respond answers. Something like that, right? So somebody asked, "What do you think about Mark Zuckerberg?" I know you read it, and the chatbot said, "I don't think he's a very honest, ethical person." So another goof from Mark. I mean, anyway,
Sure.
so one, so there are a couple of more questions here. I'll just put it across. I mean, this is a question which I think Pushkar, you could also, suggest. This is a pretty lengthy question. I'm not sure. Yeah, it's still visible, is it? So the gist of the question is that how do you protect? How do compounders protect their interest from institutional investors? Both you can probably gain on various perspectives.
So it, does the question mean an angel investor didn't allow an institutional
Yeah,
investor to
let
come
me
in?
take this up because there's a reference to an article I had written, and it was actually from a personal experience.
Okay.
So what happens in the SHAs is that I mean, there are two ways to structure the SHA or the legal agreements with the investors. One is at every stage, every investor signs off for the next round and so on and so forth. And it so happened in our case, that's what we followed. There was a lawyer who was an angel investor, and he had drafted the SHA, and he had made sure that every round I need to sign off, so to say. And then that led to a problem because he was not willing to sign when a formal VC was coming, and that led to some problems, so to say. The way to solve this problem is what we implemented after that round, wherein the founder CEO was given the power of attorney by all the angel investors that whatever next round happens, you have the power of attorney to negotiate, to sign, and move on, and so on and so forth. As long as there is an up round and stuff like that. I mean, if it's a down round, then you may have to take approvals. But as long as it's an up round, then we give you the power of attorney to negotiate, sign, and so on and so forth. Which is what I later realized when I spoke to other startups that yeah, we can't go to individual investors. We have right from day one, the CEO has the power of attorney to kind of sign and execute and move on and so on and so forth. So that's the way to address that problem.
Any thoughts, Pushkar? Anything to add on to? Any other best practices you can suggest?
So I also haven't seen any SHA where individual investors can stop around. It can happen sometimes, maybe, especially when there's a lawyer who's also investor drafting the SHA. So lawyers are known for such intricate agreements. But usually, I think, as Ram said, like all investors, big or small, give power of attorney to the CEO of the company, and CEO negotiates on the behalf. As long as there is not a down round, so see, as an investor, what we want is our rights to be protected. It should not be something like we invested a $10 million and all of a sudden founder thinks like I want to raise money of 5 million. So as long as there's no down round, or we are allowed to say do our pro rata investment, as long as those basic clauses are protected, I don't think any investor, like any professional investor, is really has any incentive of stalling around. It might have been some personal vendetta where the investor said, "Hey, I don't want this round to go ahead." I haven't seen this happening.
Has it happened to you
Not
now?
rare.
Personal vendetta sort of, troubling you in
Was it a
investment?
personal vendetta? It was just that, as my write-up also explained, basically he was looking for an exit. So
Not in that case. I mean, otherwise as well. Has it ever happened that the founder
that is one
just
goof up I've not had so far. That either from a co-investor or a founder perspective. अच्छा तू आया है, तेरे को तो मैं डुबा.
चाहे कंपनी डूबे तुझे तो डुबा ही रहूंगा. Very interesting. I know. So there is a long question for Gurbaksh. I guess Gurbaksh, that's a question which you should ask Ram directly or Langdon. Maybe he might be able to, or Pushkar for that matter. I'm not taking it up because I wouldn't be able to explain the question. It's pretty long. Something from Shubhangi here. If compliance and legal issues keep meddling during a startup's initial days, how do we keep it less complicated? Hire Pushkar.
No, I think one of the easiest ways, you just keep a very small SHA. Like, don't put a lot of clauses. I understand, like, especially if you go through a lawyer. Lawyers have a tendency to draft a 10-page SHA because that's how they make money. But my advice is just go on the website, download Y Combinator Safe Note, which is a very founder-friendly agreement, and use that as a base. Create something similar. So maybe all terms might not be applicable to in India, or your investors might not agree on everything, but using that as a base case scenario, as a benchmark, and then creating a SHA or a term sheet on that line helps a lot. Most investors also understand that they can't squeeze the founder. It's the founders who build the companies, not investors. So they're also totally fine giving founders a lot of freedom, a lot of flexibility, not putting any clause that can delay future fundraising, as long as they feel their rights are protected. As a founder, all I'm interested in is the company to become big so that I make my money. So both the rights of founders and investors are aligned. The only thing that where there is a discord is where, as an investor, you feel founder can take undue advantage of you, and that is something you should be aware of. That's it. But Ram, like, your thoughts on this as an investor? What do you look at?
From a compliance point of view?
Yeah, or from a SHA point of view, term sheet point of view.
I guess her question was mostly
I
about
don't
how.
go too much into detail about the terms. Typically there is a group through which I invest, so I let all these paperwork nitty-gritties be sorted out by them. So, yeah. As a small-time investor, I'm not worried about rights and blah blah. I'm more worried about boss paisa banega ki nahi banega. As long as paisa banega, sab to gaya.
But as a founder perspective,
I look at it as that, if you're getting into nitty-gritties of boss, I need to protect me, means that that investment has already gone south. Then I might as well write it off rather than get into other issues की इसमें 10% वापस मिलेगा या 5% वापस मिलेगा. Write off करो, आगे बढ़ो.
बहुत पैसे around आपके पास.
So that is actually a wrong notion which a lot of people have. Acha, you're an angel investor means that you're sitting on like a pile of 100 crore or something. I'm like, boss, I have allocated from my regular mutual fund investments to do this, and only time will tell whether it was a smart move or a disastrous move.
मेरा खून पसीना ले लो टाइप ना. Right, very interesting. But so her question was, I guess, on more on the founder perspective rather than the investor perspective. How does a founder make sure that they're safe from meddling investors? I guess there is no. I mean, apart from a proper agreement, I guess there is no other thing which you can do, right? Not much.
Not much.
But can investors like you, angel investors who do using a syndicate, right? Can you also add value because you're not interacting with the founder very often? I mean, of course, founders cannot invest with a lot of small investors as well. I mean, there's a limitation of time. But have you created value to any of your startups? Just to take an inspiration from that any founder who's listening to this can take as an inspiration and reach out to their investment community?
So it depends on the domain and where you can add value. So obviously, I don't come from a legal background, so I've never been able to add value from a compliance legal perspective. I've told them about the goof-ups I have had so that they don't make the same mistakes. But then so for instance, one of the tech companies I am invested in, so they were trying to work with retail companies basically. And I was in touch with a few retail companies. In fact, I was also in touch with a VC, micro VC, which is focused on retail companies in the US. So I made those introductions so that they could get some kind of partnership going on over there. And I keep making introductions wherever I can. So that always helps. And that's where again the domain expertise comes into play. If you're investing in an area which you understand well, you have a network there, and you can make introductions, that always makes a huge difference. And founders love that hey, this investor is able to bring these business deals or discussion possibilities. That always helps.
All right. So we're in the last few minutes of the call because you already overshot the time, right? I guess you have engagements as well. I mean, Pushkar definitely has to go for a hike in an undisclosed place, right? I'm pretty sure. And then I call him, he's always in a hike. Dude, I can't. It's on a hike, right? On a hike. Anyways, I can vouch for what Ram said in terms of, connecting with people. I had this small query which I wanted, I wanted to connect with a few people, and Ram was like, the next day, my inbox is like Ram introducing. So that's very nice, actually. Very helpful, in fact, to get stuff. So that's definitely one thing that I can really learn. So I have two more questions for you. One, let's quickly take from Saurabh. I hope I haven't pulled this question before. If you answer this.
So I can actually say Saurabh is one of the culprits behind my continuing to invest in angels as an asset class. Yeah, so two things make me continue to be interested in this space. One, at a portfolio level, at least I am sitting on paper gains, and that gives me the confidence that in a long-term basis, this is a good asset class for me to have some exposure to. I mean, I'm always trying to cap my overall percentage of assets allocated to this, but that apart, I do believe that it's a good asset class to hold. Apart from this, my bulk of my investments are into the Indian index. So earlier I used to do a lot of actively managed mutual funds. Now I just put the money in the index and kind of let it accumulate. So yeah, equity, listed equity, and then definitely angel investment as an asset class. As a certain percentage you should definitely hold. DJ, you're on mute.
Sorry, the last question. Varun is definitely after a case. There's a second or third question he's asking, right? Do you have FOMO? And my question, an addendum to it, right? Has it ever landed into trouble?
Now I don't have FOMO, and the trouble is the exact thing which happened. So I talked about the fintech player which shut down, within 6 months of investing into it. That was a clear case of FOMO. When I look back at it, I did that decision in a hurry. I was like, yeah, this is a space I wanted to get into. Here is an opportunity. Someone has done the validation. Let me just jump into it. I didn't do a very serious assessment about it, and it didn't kind of work out. Now I don't have FOMO. I take my time. The good thing with angel investments is that it's not an IPO deal कि अभी पैसा डालना है और कल जो है list हो जाएगा types. Usually there is enough time for you to think and speak to people and get perspective. So nowadays I don't have FOMO. DJ, you're
so yeah, I'm back. Sorry, hand-mouth coordination is not working very well right now. But anyways, so I guess we overshot the time. It was a very interesting discussion. Even though I wanted to make it more humorous, but I guess we had some serious topics coming in with, and I guess people like to ask serious questions as well. Pushkar warned me about it, but nevertheless, but I still believe we had some good laughs in between. So what is next for our Uddam and AKA F Fudu? What is next? You bring up more?
Yeah, there are a few stories which I've already kind of written, and I'm yet to publish it. I don't know whether I have the persistence to create a book out of it or a mini podcast series out of it. Those are ideas I'm kind of fiddling with. But yeah, you'll definitely hear more from Uddam very soon.
You do know that, right? LinkedIn has got an audio only even now. I mean, I just saw it recently when I was trying to
Oh, okay.
make it.
I didn't know about
Maybe you
that.
can create a, since you also enjoy reading books and all those stuff, right? So late night Uddam series.
Sure.
Anyways, so I got a question from a LinkedIn user. I can't see the name. Pratibha Iyer. It's not visible over here in the stream. I guess you should reach. You should reach out to Pushkar and Ram on personal DMs to.
I know a very good lawyer who's kind of helped me and Interlo Labs. She's kind of used to the startup world, so I'm happy to connect you with that person. But otherwise, I can't help with the 70-page SSHA, man.
Pushkar, your expertise, man. No.
We are also not a law
It's
firm.
already said go to Y Combinator, download it. Just throw the 70-page SHA into the
70
dustbin.
pages, is it? Wow. Awesome. Good luck, Pratibha.
Seems like an M&A deal.
It's just work cut out now. Anyways, I guess that's it. Yeah, we should hang up now and get back to working. Again, I'm pretty sure a lot of people are watching from our office on this thing. And we're getting more questions, but I'm sorry, we are really out of time, and I'm sure.
Feel free to ping me directly on LinkedIn, guys. I'll try my best to address.
Right. Or else you can ask me his email. You can ask me the email ID and I can give his personal email ID. Yeah? So I don't tell that it's me. But no, I guess he's very responsive on LinkedIn, right? So that's pretty much it. Thanks, Ram. Let's try to do it again later with more goof-up stories, and bring in maybe the victims as well, or sorry, the culprits as well, and probably do a judgment series as well. But nevertheless, it was good fun, great talking, and hopefully we get to read more Uddam, right?
Absolutely. Great. Thank you so much. Cheers, guys. Bye-bye.
Thanks.
Bye.
Bye.
Enjoy your undisclosed location.
Yeah. Thank you.
All right. Bye.